Hi guys, welcome to my monthly recap, and this is the monthly recap for the month of March 2025. And as you can see, I'm quite happy because we hit our target, which is a plus. And it's quite good. Again, if you're new to this channel, let me go through some things I love to say. I trade just one pair, that is CADJPY. I trade just one session, which is the New York session. I take just one trade per day because I see it more as an investment and not day trading. I also take just one entry on my 5 minutes time frame. I take just one zone in my higher time frame, and I make it as simple and as defined as possible, so I don't have to think and tweak a lot of things, which is what people do, and then they begin to blame the markets, or they draw different lines and things are not going, and then they begin to blame the market. I'm not trying to say my strategy is perfect. Obviously it's not. I'm not the king of blues because I don't always have wins. I take losses, just as I believe you also do. But that's the reality of trading. You need to take losses, but you want to ensure that when you take your losses, you ensure that your losses would be much less than your wins. And that's why I target a very high risk to reward, which is about 1 to 5, and it's live. You can join me on my live sessions where we show our trades. The only caveat is we have specific days where we trade, and there are days where we don't trade. For instance, since we took just one trade in the month of March, we didn't trade for the rest of the month. Without much ado, let's go and see my portfolio, the data I have. So I created this Excel sheet so that I can track my data. I did it myself. If in case you would like it, you could drop your comment in the comment section or drop a message and I'll try to get it to you. It's free. I just did it, and the beauty of this is that it shows your total trades, your wins. You can tweak this to be, if you target 3 RR. This is based on risk to reward. Please pardon me. So I try to get like an overview of the year. So at the end of the year, this is for the whole year. So at the end of the year, you can see for this year now, in total, I've gotten 9 risk to reward. That's about 18% because I risk 2% for my trades. So let's go back and see. Okay, sorry for that. Let's go back. So this is January. If you've not seen the January recap, you would see this. Please go and see it. The data I have here is consistent with what I said in the video. So we had a loss. The first trade was a loss on the 13th of January. The second was a win. The third was a win, and we made our expected gains, which is 5%. And if you multiply that by 2, you have 10%. So beautifully in March, I'm skipping February because I made a loss. Again, the video is on YouTube. If you want to check it, please check it. You see the loss I took, and that was the only trade for the month of February. So in the month of March, this is a quite good one. I mean, it looks like anytime I have a good trade at the first day of the month, I'm always happy because I have much time to do other things. Besides, I'm still a student. So you have this at the beginning of the month, and that means I got a 10% on one trade because I risk 2%. I'm saying that again for emphasis sake. Yeah, so if I risk 3%, I'll get 15. If I risk 10, I'll get 50%. This would be too high. Probably for an account I flip, that's where I risk about 20%. So I flip it to 100. Now that's very risky. I would not advise you to do it, because imagine you did it here, you would have lost 20%. If you did it here, and again, if you check some of the videos I did last year of the recap, you see I had the time where I had about 4 to 5 consecutive losses. So that will have blown your account. So again, take it gently and trade responsibly. So let's go to the chart so I don't continue speaking. I can do this all day. I'm passionate about the foreign exchange market. So if we go to the charts, again, this is today. I want to shoot this today so I can focus on other things. Yes, so we took the zone. Now, how we get the zone might not be clear. I'm leaving that to myself and my trading partners. But just a tip on how we look at the zones. So the only subjective part of this strategy is how to pick the order block, or the whether support, demand, supply, whichever. I think it's the same thing, just different ways of calling it. So there was no fair value gap here, so I just picked this based on, I noticed that the market is reacting at this zone just before the market started. So I just drew this out, and voila, you notice I looked at the pre-New York session. I drew this zone when I noticed that the market reacted here. I felt, okay, let's see what will happen in this zone. And so the market tapped in, and we got an entry quite fast. And our entry, we don't wait for return, we just enter straight away. I mean, in a way, we are waiting for a return, because the order block is more like an order block, a return again. So you can argue that this is a return to order block of the previous one, whichever way. This to show you that I know a lot of strategies, but this is a time constrained strategy, so it must be in the New York time. So when it came here, now the psychological aspect is quite hard, because when this market was retracing here, we were like, oh, is this happening? But it went in our favor and did not come back. It went straight to 125. Now it even tanked to about 127. Now I'm going to speak about this move, because many times traders will say, oh, because of this move, they will try to say in their next trade, they will target maybe 1 to 10 or 1 to 100, and the market does not work that way. So try to take what you can take. I also wanted to take a 1 to 6 to cover for the loss of February, but I felt that if the market should turn or go against me, then I would be in deep soup, because I've learned not to move to break even. I leave my stop loss here. Why? It's simple. As that when I was going into this trade here, I planned to lose the money. So I shouldn't try to take partials. We don't do that. We leave our trade. It's either a win or a loss, and we move. I think that way we have a lot of rules. So that way I believe that profitability would be here for us. So let me see if as I said on the live podcast, on the live show that we had, the live trading, I said this, you can use whatever method for your entries. If this is too risky, I've had people say, oh, it's too risky, you could try to use, some will use trend line. It broke, probably just that your stop loss might be bigger. You might have to take yours with this close below this trend line. You take yours. That's another way to enter. You can possibly use moving averages. That is also another way to enter. Some people might use what's this one? I think they use this one when it closed below here. I think order flow or something. I know I've seen people use this as an entry, probably close, then retouch here, then they enter here. Whichever way you want to enter, it's fine, but we just enter under the close of the last up candle, and that's how we get in. We get in here. This was 18 pips, because I put the stop loss just above the zone, and that's it. And target 1 to 5. I mean, it's preset. I'm quite lazy, so I have a lot of things. I preset many things, so this is a preset on TradingView. Even in case you want me to go through how I have these presets, where I have different templates, so I don't have to think too much, please again comment and I'll do a video on it. So yeah, this went straight to TP, and we had a very good trade, and that's the end of trading for us for this month until April. So yeah, that's all I have for you today. Oh, one more thing before I forget. For those who would doubt and say, oh, I just started a $100,000 100k prop firm challenge, and if you can see on the screen just right here, you can see that the first trade, which is in February, was a loss. The second one, you have 3 trades there. Now those 3 trades were I think it's the markets or the broker, they tried to split the trades because the lot size was quite large. Yep, that's 2%. Someone was like, what? Again, your lot size should be a function of how much you're willing to risk and your stop loss. I don't stress. I don't even know what the lot size is. My lot size is mathematical. So everything should have, it should be that mathematical. And we put stop losses because we have planned to lose a particular amount of money. So, it can be really easy if you want it to be easy. So yes, if you've not seen, I have another channel where I and my wife will discuss our health journey. I'm going to put a description to that in, I'll put a link to that video in the description of this video. Yes. Till the next video, again, I'm going to be discussing different strategies. I'm going to be bringing out videos about different strategies. But in all of this, I want you to go and gather data. I'm saying I'm doing all I'm doing because I have data. I spoke about in the trade recap of my February video. I said I was not perturbed because I had data from 2 years ago, not just last year, upper year, and February was not so good a month. So I was not disturbed. So if you don't have data, you're trading, you wouldn't even have confidence to take trades. So get data, analyze your strategy, have defined stop losses, define your risk to reward, define just everything when you want to trade, when you're not trading, and I believe you will become profitable. Till the next video, have a good one, stay blessed, bye.